I feel that Bitcoin is like fire or electricity.
We convince people that it is the most pristine collateral, and maybe we even peg the dollar to Bitcoin. What does that world look like? And realistically, not rainbows and butterflies, but realistically, what does that world look like? Because I've seen you say that you see Bitcoin coexisting with the dollar.
I think Bitcoin becomes a reserve asset, just like you can make it. MicroStrategy made it our reserve asset, and our stock is backed by Bitcoin, and our stock went from $120 a share to $600 a share. So you could make it the reserve asset in El Salvador and use the dollar that El Salvadorians have, and or they could issue another currency, and then the currency strengthens. So I think what you have is a currency the government controls. It's like every company has a stock, right? What's the currency of a company? It's stock. So if a company adopts Bitcoin as its reserve asset, then the stock starts to be backed by the Bitcoin. So the best way to think about this transition is companies start to buy Bitcoin as their reserve asset, and then they have stocks that trade as derivatives of the Bitcoin. And then small countries buy Bitcoin, and then they have a currency backed as a derivative of the Bitcoin, and then larger countries. And over time, you would just think that Bitcoin becomes a larger and larger asset class. It goes from 1 trillion to 10 trillion to 100 trillion to 200 trillion. Are companies going to always have stocks? Sure. Just because I bought Bitcoin doesn't mean I gave up the right to issue stock or to buy my stock back or to do what I want with my stock. By the way, my company also has debt. So MicroStrategy has convertible debt, secured debt, and equity. We also have stock options. We also have restricted stock units. So I just counted 5 different derivatives of Bitcoin. A country can, or a city can buy Bitcoin as a reserve asset. And then a city can't issue currency, but they can issue debt. The city of New York could buy $1 billion of Bitcoin, and they could issue $1 billion worth of debt backed by the Bitcoin. A country, Turkey could buy $10 billion of Bitcoin, issue the lira. They can also issue debt backed by the Bitcoin. And so, or flavors of debt, municipal debt, sovereign debt, short dated debt, long-term debt, all sorts of debts. So in the old days, I mean, the gold standard was 1-to-1 backing. $20 of gold equals $20 of currency. The gold reserve standard was maybe 20% backing and 10% backing and 5% backing. A Bitcoin standard could be any number of things, right? That MicroStrategy could have put just 10% of its balance sheet into Bitcoin, and we would have had like a Bitcoin 10% reserve. Our stock would have benefited a little bit, but not a lot. When we went to 500 million, we went to 100% of our equity Bitcoin backed. The stock doubled. But then we went and we borrowed money. And so today, in theory, we're like 300 or 400% Bitcoin backed, right? And so our stock went up by a factor of 5.
Do you feel a pressure? I mean, I know that you bought many coins when it was at the 50 range and now it fell. You bought more. But do you ever feel like you're going to fall on the sword if Bitcoin were to fail?
No, like I feel that Bitcoin is like fire or electricity. I think it's just a matter of time. I think it took the human race 100,000 years to figure out fire. So like that was a slow thing. I think it took the human race 20 years to figure out electricity, or 30 years. I don't think Bitcoin will take 30 years. I think information's spreading faster, but maybe it takes another decade. Um, we pursued a strategy, to develop, to own, and to develop Bitcoin. And so we're comfortable with that strategy. And we've got a long time frame. So I think we're prepared for all the volatility in the near term. And I think time is on our side. I think there's more than 100 million people that have Bitcoin, and there's tens of thousands of companies that are all doing something to commercialize or evangelize or upgrade and develop Bitcoin. So I think we're in good company. I enjoy watching all of the developments in the ecosystem, and we'll do our part and everything we can do, but we won't be the only ones working on this. There's a lot of other people everywhere in the world in every industry working equally hard or harder.
Yeah, so there isn't a price at which you would be forced to liquidate any of your Bitcoin if it fell too much.
No,
Okay.
the Bitcoin mining network is really the security network of Bitcoin. It's millions of different machines that are all running the SHA-256 hashing function in order to throw up a wall of encrypted energy to protect your money. In that case, it's quite an achievement. It's the first line of defense for Bitcoin. It's protecting the network. It means that all of those machines everywhere on earth are preventing any malefactor from stealing your money or screwing with the network.
So what will it take to get other big corporations like the Googles and the Apples and the Facebooks into Bitcoin? Do you just expect it's a matter of time, or what's needed to make it happen?
I think on the operational P&L side, I think they'll build Bitcoin into the Google Pay, Apple Pay, into Facebook, because they need to do that to compete with PayPal and Square Cash. That'll happen naturally because of the tech imperative. And I think they'll do that because that's in their best interest to do that. I think on the balance sheet side, the most important thing would be the accounting treatment. Right now, accounting isn't kept up with the rate of technology advance. And most of the rules surrounding accounting for digital assets were put in place before any public companies owned any. A year ago, you couldn't find any public companies that owned $10 million worth of digital assets. And now you have billions of dollars held in public companies. The current accounting treatment is to treat digital assets as an indefinite intangible. An indefinite intangible would be, you could characterize it as the most conservative accounting treatment you could apply to any property or any asset. If you were to apply indefinite intangible accounting treatment to your apartment, that would mean that you start by booking it at the price you paid for it. And then on Saturday night, when you're out at a party, you go to every single person, even the drunk ones, and you ask them if they'll buy your apartment from you. And if they say yes, you ask them what they'll pay for it. And if they say, I'll give you $100, then you have to write down $100. That's the price for the apartment. You go back and you account for your apartment as $100, and you write it down to $100, and you take that as an operating loss for the period. And you say, looks like I lost all that money on my apartment. And then later on, if the rest of the world thinks it's really worth $10 million, you still carry it on your books at $100, because once upon a time, the market value of the apartment was $100.